Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Thanks for joining. Today I interviewed Jesse Fragale, who is an investor with Avison Young Commercial. He's also a real estate investor and has been investing for over 10 years now with a focus on multi-residential properties. He's the host of the Working Capital Real Estate Podcast, and he provides real estate content on his YouTube channel as well. He holds an MBA and Masters of Law from the University of Toronto. On this episode, we talked about a quick market update, what he's seeing on the commercial side of things today, how he's sourcing deals, the foreign buyers ban, and also how he started exploring opportunities in Orlando, Florida, and why he's choosing to do so. So there you go. I hope you'll enjoy the episode. Make sure to leave us a 5-star review. As always, just scroll down on your Apple Podcasts app, and then you can find the review section there. Give us a good 5-star. Make sure that we keep growing this thing, and your support is truly appreciated. And finally, if you want to talk about some multi-unit opportunities that we have, we've got an 11-unit building right now that we are exploring in the Niagara region. So if you'd like to get in on a deal like that, just feel free to reach out to me by going to welloff.ca, booking a call, or again on Instagram, welloffx. There you go. Enjoy the episode. All right, I'm here with Jesse. Again, first time we meet. Thank you for coming by today. It's great to have a chance to sit down with you face to face. And I like to just start off by asking about your childhood. So do you want to tell me about your early days, where you grew up, a couple things you remember?
Yeah, sure. That's, I'll be honest, I've never got that as the first real estate question, but yeah, I grew up actually not too far from here in Markham, Unionville, which for your listeners that maybe don't know, it's about half an hour, 40 minutes north of downtown Toronto. Grew up pretty normal childhood, Canadian childhood, played hockey growing up, pretty much my whole life, played football, which is somewhat unusual to start at a young age as a Canadian, but yeah, my parents, both mom and dad, kind of immigrant families, came, it's a very common story in Canada, came over to this country, both families, to give their kids a better life. So my family on my dad's side immigrated to both New York and Toronto. And my mom, of all places, Chatham, Ontario, they immigrated there and then came to Toronto. So yeah, I grew up big family, very entrepreneurial. My grandfather on my mom's side was a restaurant owner. My dad is a mechanic by trade, but him and his brothers, they ran an automotive business. So I kind of grew up around cars, grew up in garages, and I think it was part of what influenced kind of my trajectory of, not being able to kind of hold a job as a pure employee, my whole life. So yeah, that entrepreneurial spirit definitely got from them. So yeah, that's kind of high level what the childhood was like.
So you didn't play any soccer growing up at all?
So I did play soccer. I didn't play soccer to a high level. I think I played select, but yeah, you're driving at the Italian background, not playing soccer. Yeah, so I played a little bit of soccer, but predominantly I played hockey, junior, in junior hockey, Markham Waxers, Islanders, that kind of thing. And
was your dream to make it to the NHL as a kid?
You know what? It was always I always enjoyed playing more than watching to a certain extent for all sports. Like I have buddies that are diehard college football fans, NFL, NHL. I still like love watching hockey. Our industry can't really go too many weeks without seeing a game or going to a game, taking a client out. But I always enjoyed playing more. But I wasn't a big gonna make it in hockey kind of kid. And I eventually played university football for 2 years, and it's funny, where I started buying investment properties, and that was in university, and that was at a point where I can't juggle all these things. So
right, so we could maybe talk about that a little bit. Also, what position did you play in football?
So I played in high school. I played free safety, and then kind of switched between middle linebacker and outside linebacker. Cool. So it was a little different in university. We didn't really have that type of system.
Yeah.
But yeah, those, I loved that position. Free safety was a lot of fun.
Yeah. I just started kind of watching a little bit of football because my father-in-law is a big Cowboys fan. So now I watch with my wife just to be able to have a conversation with them from time to time, you know.
I was going to say, it's usually the other way around.
What do you mean?
The wife watching football so she can have a conversation.
Yeah, I guess so. But football was never a sport like that I followed, right? Yeah. I was always into basketball or MMA as well.
Yeah.
So I'm just starting to learn a little bit about that. But
well, it's funny you mentioned MMA. I was like, this is like dating me on, you know, what is a popular mixed martial sport art right now. But I remember like as a kid, my parents put me in karate really young. Yeah. They're like, yeah, Canadians do karate.
Yeah.
And then I did karate and taekwondo my whole life. I did a little bit of Brazilian jiu-jitsu when I was like 15, 16, but I love MMA. Yeah. And who do you have on the football side? Who do you have winning the Super Bowl this year?
Oh, I can't tell you. Like, I'm not that knowledgeable, but let's just say I'm rooting for the Bills or the Cowboys.
Gotcha.
That's it. Those are the two teams. My wife's brother likes the Bills. Her dad likes the Cowboys. Those are the teams I'm watching. So
happy medium.
Yeah, nice. Exactly. I did karate too as a kid. There's some like pretty funny videos of me when I was maybe 4 years old, and I don't know why they would do this, but they would make you learn a routine. Like you're not hitting anything, you're just doing movements, and then you had to memorize this routine to get to the next belt.
Yeah, and I think we might have had a class together.
Yeah. And I didn't know, like, for some reason I couldn't remember what I was doing. So you can see me, my parents were filming this video of me, and I'm looking to my left, to my right, and just copying what they're doing.
Yeah.
And I don't know how. Funny. Yeah, I don't know how I got the belt, but I did.
That's amazing. I totally forgot about that. But yeah, it'd be like almost like a music recital. Like people would come, the parents would be there, and you'd be doing the different levels. That's funny, man. I forgot about that.
And sorry, one more quick thing about that. So I had some friends in that class, in the karate class with me, and I remember one time we were doing like a stretch, and sorry,
no worries.
I had to tickle. I tickled my friend's foot.
Yeah.
And he just got in so much trouble because we were supposed to be quiet. Anyway, I haven't thought about that in a long time, but that was just hilarious.
But man, the crazy part with that is I remember pretty much all my football coaches, all my hockey coaches. Usually you remember the really bad ones and the really good ones, right? Like those, they make an impact on you. But on the martial arts side, I found that those were some of the guys I remember from the longest time. And it's just the basic stuff. They would say, make sure you fold your clothes properly. Make sure, like, the ones I had were very strict about etiquette.
Yeah.
And I found that really stuck with me. And that's one thing about MMA, any martial art in general, I find that is a component of it, proper procedure, etiquette. So
yeah, for sure. That's why it's nice to see when you are watching these two guys like bash each other's heads in, there's still tons of respect, right?
Yeah.
I know it sounds weird for somebody who might not be an MMA fan, but they're in there, they're going to hug at the end of the fight. They're going to bow to each other. It's really cool to see that.
Yeah, for sure.
Yeah. So let's go back to Waterloo, right? That's where you studied?
I was in Laurier, but yeah, living in Waterloo. Okay, at Laurier. So what made you want to start investing? Because I know, I think I've heard you tell your story on other podcasts as well, but you would rent out a home that you got to other students. Where did that idea come from and the courage to do that? So the idea came initially, so to just back up a sec. So I said my father was entrepreneurial. He started an automotive business. One of his close friends, a guy named Mikey, I always looked up to because he was, 10 years my dad's junior. So when you're a kid and your dad, your dad's always just old. He's an older guy. Yeah. But looking back now, my dad being in his 40s as I was a kid or late 30s, whatever it was, his buddy being 10 years younger was like the cool guy. Yeah. So I looked up to this guy, and I'm a big car guy. This guy always had cool cars, and finally, I always wondered, how does he like afford, or, what does he do? And cause I noticed he didn't have a typical job. And long story short is that he was into rental properties. So I knew that as a young age, and I knew that from a young age. So growing up, that was kind of in the back of my head. And then when I went to university, so I lived with 4 other guys, pretty typical like house after, your first year, you're in residence. And one of my roommates, Giancarlo, his dad bought the house that we lived in. So I was, my checks, or, my dad's checks, he was paying for me for my rent at school. They were going straight to my buddy, Giancarlo. So that was like kind of lit the fuse of, okay, it's possible to rent these out to other students. And I'm a perfect example of a tenant paying rent to another student. And then it kind of tied in with, this idea that my dad's buddy, this is the way he earned income. And it kind of coalesced to like the idea of, not groundbreaking, but I'm like, maybe I could buy a property. So that all started in 2008. So I was 19 and turning 20. And I started looking for properties when I was 19, and then eventually purchased my first property at 20. And that was to 4 girls that were going to University of Waterloo.
Okay. So 4 girls that that must have been kind of hard though.
Yeah, excuse me, 5 girls. Yeah.
5 girls. It must have been kind of hard though. If, if you're like the landlord and you got these 5 girls and you're a young guy.
Yeah. Somebody told me very early in my investing career was, you don't want to tell people, obviously you don't want to outright lie to people, but you don't want to tell people you're the owner of the property.
Yeah.
You work for the owner, you work for the ownership group, you're part of the ownership group, you're the property manager. One thing I had going for me is like when I was 20, I pretty much looked the way I look now. So I was like, I wasn't in fear of them thinking like I was a really young guy. So I think the assumption was that I was just maybe not in my early 20s, maybe in my late 20s. So I could have a bit of authority and, not just look like they're like, who's this kid?
Yeah.
But so it was 5 girls. And I remember that time, I think it was $400 each that they were paying. And yeah, like I learned a lot from that first property and dealing with 5 different personalities. But yeah, that was the first one.
Yeah. I wonder if that's like an Italian thing to not tell people you're the owner of the property. Yeah. I don't know what it is. There was a guy I used to work with. He owned a couple buildings. And when I would sometimes go with him to these buildings and he'd be like, when I see these tenants, I'm going to tell them I'm the property manager, so don't say anything. And then he wouldn't drive his BMW. He'd go like drive, his basic Corolla or whatever, a Camry. I forget what he had. So yeah. I don't know what
So that second piece I know is, there's a lot of people like that, but definitely I think there's an aspect of that where they're just like, I don't want to see them think of any affluence. Like,
yeah.
And like, even to this day, if I go to a property, sometimes I'll go to, properties that we own, I don't like driving into the property, and it's not even just about a car. It's just like, if I go to a property, I want it to be as seamless as possible. I don't want to make a huge statement. And, but yeah, that's funny. I'm not sure the origin or the rationale. But I think there's a difference where even when we give, now that we have management for our properties, even when we give anything to tenants or we're talking to tenants, I find that if you can have a buffer, somebody between that, I feel like tenants feel and probably rightly that they have somebody on their side.
Yeah.
And I think if you know that you're dealing directly with the owner, sometimes you don't have time to think, and it's not about somebody being right or wrong, but you don't have on the spot be able to give an answer. So sometimes it's good to be able to have that buffer, hear a concern, be able to digest it and think of the proper response, and then
for sure. I find that really helpful when it comes to like any sort of eviction or whatever, to have a paralegal or somebody like that can be the middleman or middlewoman between you. Yeah. Okay, let's talk a little bit about the market. So you're obviously, maybe not everyone knows this, but you're involved on the commercial side of real estate. You're a real estate agent, right?
Yep.
Licensed. And let's talk a bit about the commercial market. We took a bit of a hit a couple, let's say 2 years ago, roughly, or maybe even 3 years ago at this point with the commercial side. What are we seeing now?
Yeah, so the easiest way to talk about commercials, to break it down into the I call the food groups, and the main ones being, retail, office, multi-residential, and I'm thinking apartment buildings here, and industrial. Now you can break those up into further subcategories. Obviously, there's going to be industrial, there's going to be components that are distribution, last mile type of facilities. On the retail side, there's going to be and residential, there's going to be hospitality. But if you look at it as the four main, we can start with, we'll start with the ones that did really well in the last year. Multi-residential apartment buildings and industrial, absolutely on fire. The last couple of years, right through, what we've been going through the last 12 to 24 months. Excuse me. And I think the part of the reason for that is the fact that people were at home. You see that a lot more online shopping. You're seeing that these last mile delivery warehousing and industrial facilities, there's huge demand for them. And our vacancy rate was extraordinarily low, and still in industrial is extraordinarily low. Multi-residential, it seems like everybody that had a little bit of money in the last 24 months bought an apartment building, or was an investor in a syndication, this in the States and in Canada. When you go over to the retail side, retail is I think a bit misunderstood. I think most people would agree, especially in the US, that it is overbuilt. If you look at the square footage of, I can't even remember if it's 40 square feet per one person of mall space, whereas in Canada, I think it's in the low teens. You could look online for listeners. I think PwC has a really good report on that. But with retail, it's not the good grocery store anchored retail has been doing tremendously well, not surprisingly, through the lockdown and people at home, because those were basically the only places you could go. Now the secondary and tertiary market retail, like we're just saying, the karate shop or the, Jenny's Nails, like those little B and C class buildings, those I think have the greater tendency to be repositioned. And then lastly, the office. The office is that's my area that I work with my partner, and I'll be the first to tell you that it is in flux. I think there's a push and pull. There's certain people that want to be back in the office. There's certain companies that are demanding it. And then there's certain companies that can work hybrid. I'm not sure if you saw recently, the Wall Street Journal had an article, Disney and Starbucks CEOs basically saying that we want people back. And, we've said it once, but now we're mandating it. How that ends up kind of rolling out and how it impacts commercial real estate remains to be seen. But that's kind of high level how I see like the four different areas of commercial real estate right now. And, it's a long-winded way of saying it. I think there's going to be opportunity in 2023 and 2024, but how exactly all this rolls out is really hard to say because we have so many different variables. We're coming out of this lockdown, a period, especially in Canada, but now we're potentially entering kind of recessionary waters. So who knows?
Yeah, it's definitely something that I've been selling real estate since 2013. And since the moment that I got in the market, it's always been just up, up, up. There's been a few lulls here and there, really small.
Yeah.
But this is the first time people from our generation are going to experience potentially a long recession.
Yep.
Or who knows how long it's going to be. But there's always opportunities even in this type of environment. So you mentioned a bit of multi-res, how anyone who had some cash or whatever, they were pouring it into these buildings. Are you still working on this type of stuff? Are you like buying multi-res yourself? Are you representing clients that are?
Yeah, so we have a multi-residential group at Avison Young, and they focus primarily solely on multi-residential in, I would say, Southern Ontario. They'll do deals anywhere, but for the most part, Southern Ontario. And what we're finding right now is that the bid-ask spread, so in other words, the price that owners are willing to sell and the price that the market is saying their properties are worth, there's a gap there.
Oh yeah.
Right? And anybody that was approached by a broker or contacted a broker last year or the year before, we were seeing valuations 300,000, 400,000 per unit, which is extremely expensive, even if it's in Toronto. Now we're starting to see that with interest rates going up the way that they have been going up, that there has to be an acknowledgement of devaluation or we always call it increase in cap rate. Now, what that means for the next year remains to be seen, but I do think there are going to be opportunities in multi-res. To answer your question directly, I'm definitely looking for multi-residential properties, but the big piece here is it's got to be purchased at the right price. Because as you know, for a long time, there was just this idea that cash flow, it matters, but values are going to go up, so who cares? And exactly. I think we're starting to realize that that's not the fundamental way to look at real estate.
Well, also cash flow wasn't so much of a problem because you were getting rates at 2% or 2.5% or whatever the case might be.
Yeah.
Yeah. So the cash flow looks okay when your rates that low.
For sure. And when you're coming off of 2.5% year, 5 or 10 year CMHC loan, and now you're in a 5, 6, 7% territory, it's a huge impact to your cash flow.
Yeah. I don't know, like if you're seeing this, but at this point, are you finding that there are people out there that maybe bought too high and at this point, haven't been able to get the kind of numbers they wanted, or the rates have gone up, so they're in a position where they're forced to sell, or you're not really seeing that at this point?
I think I would say that there's a spectrum of purchasers over the last year or 2 years. I don't know if it's Buffett that, there's that old phrase in investing, it's time in the market, not timing the market. And I think that is the case with real estate. Like, you have to stay in the market if you can get through the early 90s, 2001, 2008. And now you've seen these cycles. For anybody interested in studying this kind of thing, Howard Marks' Mastering Market Cycles is a fantastic book. But in terms of the market that we're in right now, I see that there are some people that either are experienced or inexperienced that are in a situation where they were buying value add properties. We have a value add property as well, where, the type of debt that you get for these properties is variable debt. It's floating rate debt because you're doing improvements to properties. So anybody that's familiar with like the BRRRR strategy for a single home, the same type of strategy when you're buying and renovating a multi-residential property, it's the same thing. Now, if you underwrote it at 3%, and even if you did a sensitivity analysis where you're like, okay, if interest rates really go crazy, 4%, 5%, nobody knew that today we'd be sitting where we are. So I do see that there are some people that purchase right and are in a challenging time, and some that purchase poorly and are in a challenging time. So I do think there is that aspect. In terms of, I think, kind of implied in your question is the default aspect, the risk of default. Most of the people that I talk to on the lending side are saying that it's not like 08, 09 where defaults were high. I think right now the system is relatively stable, but just the valuations, they kind of went crazy. And I think ultimately the interest rate environment is a good reality check, because money at 1-2%, that's not a sustainable, path.
Yeah. The reason I kind of asked that question was because I recently came across an opportunity. It's an off-market building. The owner originally wanted like $1.85 million for it, and after a while, it came down to about 1.5 something. And just like digging into it, I found out that the owner purchased it for $1.38 million. Okay, so I guess they're just trying to get out. But based on my valuation, it's worth about 1.3 right now, because the rents are like $700 a month per unit, right? Just really low rents. So yeah, I don't know if like that's happening a lot, where people just bought for too much at the time, and now they're like, oh well, values aren't going up like they were before, and the rates are really high, so maybe I should just get rid of it.
Well, it's funny. Like, we use, most people are familiar with MLS, multiple listing services. For commercial real estate, we use Altus, Insight, and CoStar. Those are like the main ones. CoStar is pretty much becoming the leader in terms of real estate information. And the reason I bring it up is there's an ability in the States, I don't know if it's rolled out in Canada, but you can see if somebody's in default on their mortgage. You can see if they've missed payments on their mortgage. So I think to your point, those are going to be ones that most likely you're going to have play in the joints in terms of getting a deal, right? If somebody purchased recently, and the flip side of that, I got a a property we're bringing to market. They were a couple Greek guys that inherited a few apartment buildings from their parents, and they purchased in the 80s and 90s. You know, those are not the type of guys that are like, oh, there's a $200,000 haircut on my sale price. Okay, whatever. Like, they purchased it so long ago that there's really no you know, obviously they don't want to lose 200,000 in terms of valuation, but it's almost a drop in the water in terms of how much it's appreciated. I think the people that purchased recently, to what you're talking about, that's going to be a situation where I think there's going to be more discounting. And then I guess the last piece is, for those that don't know, assignment sales, right? When you're buying the paper rather than the property. I'm starting to see more of that. And I don't work in residential, but just kind of being part of a few groups of investment groups, I'm starting to see that there's a lot of assignments that people are like, yeah, I need my money back, and we're willing to sell this for a decent.
Are you talking about like pre-construction assignments?
Yeah.
Okay, that kind of stuff.
Yeah.
I'm not too familiar with that, but I know that on like resale assignments, so these are from wholesalers. There's tons of opportunities that keep coming up now, whereas let's say maybe a year ago or a year and a half ago, you would barely get anything, and they weren't even deals. They were like, you know, you're buying at market value from a wholesaler. So but the times are a little bit different now for sure. I think you had mentioned on another podcast that you bought a place in Toronto. It was a building, I think. So just if you can offer some updates on that. How's that going for you? What's the latest, and what's the strategy with it?
Yeah. So right now, I think the last time I spoke about it was probably 6-7 months ago. So we're continuing our construction project. We got the suites. They were relatively old, but they were very big for an apartment building, like 1,100, 1,200 square foot.
Prime real estate, right? What was it, Bathurst?
Bathurst and Eglinton.
Yeah.
So Forest Hill, for those that don't know, it's you know, certain probably in the top 5 in terms of Canadian neighborhoods in terms of valuation. So at the end of the day, you know, if World War III happens, you know, we can say that we have the dirt there. So it's valuable real estate, valuable land. But yeah, it was basically a value add property. So we just finished 2 renovations. I actually this week saw the final kind of pictures, and I'm going to do a walkthrough probably sometime next week. And you know, I'm envious of it because it's 1,200 square feet and it's brand new. So it's beautiful, the space. Now that project, you know, this is a great example of the current economic environment, you know, where you have to be able to pivot, which is, you know, it's constantly overused word, but it's just a good descriptor of how you have to look at the market. Because if we had the ability to, or if we were looking to sell next year or, you know, the end of this year, I think that situation is probably not the best strategy. It's probably something where we hold for 5 years and refinance in 5 years.
Yeah.
So I think you have to be able to have some flexibility, but yeah, I'm excited about that. And that property is a good example for, you know, listeners that are getting into investing. That was a cold call to owners that were, you know, not particularly interested in selling, but we hit them at the right time and we found a deal. You know, no broker, you know, aside from me, but I didn't act as a broker. I just act as a purchaser. So I find that, you know, cold calling, I tell all the young guys in our office, it absolutely still works, whether it's, you know, if you're an agent or if you're an investor, calling people and dealing directly with them.
Sure. What was the price per door, if you don't mind sharing, that you got this place for?
Yeah. So the price per door, I believe it was just shy of 500,000 per unit.
Yeah.
Which, if you're in apartments, sounds insane.
Yeah.
Because it's a high price, but I think what you have to look at it is from the perspective of it's under 10 units, right? So it's not like you know, if it was a 60 unit, there's no way it would be that expensive.
Sure.
There's properties that have sold on that street for 700,000 a unit, you know, 750 a unit, and keep in mind that there are houses that are behind us that are bigger than this apartment building, right? It's Forest Hill. These are mansions that you're in a neighborhood where it's like an alternative universe. Like the prices start acting really oddly in this area.
Yeah.
However, the rates that we're seeing 2 bedrooms and 3 bedrooms being leased for $4,500, $5,000 a month. So it's kind of a different different world in terms of pricing and rent.
For sure. Yeah, that's huge. I know a couple months ago when you had some turnover, you were debating whether you wanted to put in-suite laundry and you go up to that $75K per unit renovation. You settled for, well, at least you were talking about settling for $50K. Did you end up going with the full reno or?
So it's funny you mentioned that. I think the final numbers were 55 or 56.
Yeah.
We ended up being able to put in-suite laundry, which I think is important for that area. So what we did was in-suite laundry and dishwashers. I think those are like the kind of table stakes when you're trying to get a premium rent for your properties, because especially that area, the people that are living in that neighborhood, even if they're renting a place like this, they are not the type of people that are going to be schlepping, their dirty clothes down the street.
For sure,
so,
yeah.
So that's
but that's what I'm wondering. Who was paying $4,500 to $5,000 a month? Is it like a retired doctor? Is it that kind of person or a young professional?
So yeah, I think for the most part they're young professionals, but it's a mix, right? The area, it's I would say not predominantly, but it's right across the street from my partner tells me a very popular synagogue. So there's some, I think there's a good Jewish presence in that area. So I think from a cultural standpoint, there's a lot of ties to the community there. And then in terms of the actual vocation, it's a pretty wide variety. Some retirees where, you have their kids put them in, they want them to be in a place that's nice. But for the most part, I would say young professionals, that's the target.
I actually might have somebody for you that would be looking to move into a building like that, ironically. So yeah, I'll let you know. It's actually a doctor. So.
I'll show you the pictures of the reno after.
Yeah. Oh, okay. So you have something coming up. Perfect. Okay, so that's that. And then why don't we talk a bit about how you're sourcing deals? So I know you touched on that a little bit. You said the cold calling. Are you still looking for deals now? And if so, what have been some useful tools for that?
Yeah. So, if you're in sales in general, I feel like it's a lot easier to go into different industries. So for instance, I think they still exist. Xerox, they had a huge sales culture of being able to call on the phone. And a lot of the people that I started with in commercial real estate, not a lot, but if you came from that background, people knew that you could call. So I find that in my normal day job, we still call people. We still are actually doing outbound. A lot of times now it's warm instead of cold. But in terms of, to answer your first question, absolutely still looking for deals. I will call directly. So if there's a 5 to 50 units is, if it's in Toronto, I'd say we'll go as low as 5 units. Ideally larger than that, but I'll still call. And then the other tools that I found really useful was actually a buddy of mine for, Sandy, I think a mutual friend of ours, Keller Williams, or he works, has a Keller Williams. He got me on to virtual assistants that were I had a virtual assistant already, but to actually call. And I was like, well, no, come on. They can't make cold calls. It's one thing to ask them to do administrative tasks, but they don't know the American or Canadian culture. They're not going to be able to call. And then I found that, especially multi-residential, the calls are really not, the first call to get a meeting. It's not really that complicated. And we've had success with having these individuals, training them up. That's the key, right? You have to garbage in, garbage out. You have to train them properly. But yeah, that's how we've continued to have lists that we source and say that, we want you to call on these, say that ask the owners if they're interested in selling. You work with me, that, we are looking at these type of assets. Can we set up a call or can we set up a meeting? So
the VA is calling the owner directly at their home, for example. Is that the case? You find as much information as you can about the owner. I know typically there'd be a numbered company that's the owner of the property, but then you guys dig deeper, find out who the actual person behind the number is, and I'm assuming the VA is calling them, right?
Yeah. So for those that don't know, the kind of there's a couple ways you can say you find the ownership of a building and it's a numbered company, and then you could technically go to the courthouse and find the actual records of who's the owner of the company, or what we do is we run corporate searches. those, unless you work for a company or you already have some decent income, they can be expensive to find the corporate searches. But basically a corporate search will tell you, who the owners of the company are, who's, the secretary, president. From there, all you really get is an address. So you got to kind of take that information and be resourceful, whether it's, for Canada 411 or Google, and, kind of be very persistent about finding these people. Yeah. That's really the hard part. The call, not that I know a lot of people, they struggle with cold calling, and it's usually in the beginning with nerves, but I always tell people, like, the hard part is sourcing, like actually finding, because in our world, it's more, there's a higher chance that the company's not going to be owned by, that the property's not going to be owned by an individual. If you're calling residential, it's a different story, right? 99 times out of 100, it'll be a person. Whereas for us, we got to go a couple layers deeper to find who owns this thing.
Yeah, for sure.
Yeah.
Okay, so that's an interesting thing to do. Now, are you buying through like a limited partnership at this point, or are you just doing joint ventures? Are you buying by yourself?
So my partner that I invest with, if they're smaller deals and it's just him and I, or sometimes it's him, myself, and a third buddy, we'll create a corporation, or we have a corporation that we'll buy through. It's not the most efficient way to purchase, but from a asset protection standpoint, it can have more benefits when it comes to going forward with larger properties, a limited partnership, and that's typically how we'll do it. So, high level for those that don't know, a limited partnership is made up of a general partner and typically multiple limited partnerships. The general partner is, you often hear, sponsor of the deal. That's usually synonymous with the GP, general partner. And then you have the limited partners, and people ask, what's the benefit of limited partnerships? And from the limited partner standpoint, they can lose all the money they give you, right? But that's all. And people are like, well, that doesn't sound like a good deal. But if you're the GP, you could lose all the money, but you could also be responsible for the debt, and you could be responsible for, lawsuits. Basically, your exposure is much higher. And there's certain ways to mitigate that, but that's something that, the lawyers do, and you can figure out the best way to structure it. Yeah.
And you found that for yourself, having a limited partnership has been beneficial from like a tax perspective and all that for yourself, because I don't know if you would have to be buying like multiple buildings a year for it to make sense, or maybe it's more of a case by case basis. But if you just have like one property under a limited partnership, does it still make sense to do that?
If you have one property, I'll give an example. If you have one property and it's large enough to necessitate a limited partnership, and what I mean by that is, if it's a $10 million property or $5 million property and you have 10 individuals that are investing, the laws are very specific about what can and can't be a joint venture. Sometimes you think you have a joint venture and you don't necessarily have one, because you have maybe two people that are actually doing all the work and other ones are being passive. So from our standpoint is, once you get to this larger level, limited partnership benefits in that you have very specific roles, right? The LPs lose their LP status if they are operational in any way. So you can't have a limited partner that's actually doing operational stuff for the property. The technical term is stuff. But the one benefit, or another benefit that the LP has, is that typically as you know, in the first few years of a real estate investment, you're typically not cash flowing right away, unless you're buying for cash flow. If it's value add, you're kind of, the first few years you're losing money. And if you're breaking even from a tax perspective, you're losing money, right? Because your non-cash expense amortization, you always try to get as much as you can. So what's good about that is you can actually pass those losses down to your LPs. So when in Canada, it's called the T5013. It's a partnership return. And in the States, it's called the K1. And that's the benefit, is that you can now go, hey, Mr. Investor LP, you can now take this loss and apply it to, other income that you have, and kind of reduce their tax burden. So that structure, I think, where you have multiple individuals and some are going to be absolutely passive, you're almost kind of pointed to the LP structure.
Yeah, for sure. It's always good to learn more about these things, because I'm sure there are people listening here that maybe are looking into getting into $10 million purchases or whatever. And just from the different people that I've spoken to, obviously check with like your accountant, whatever, but they told me that if you can do a joint venture, it's generally better because it's less expensive to do so. Yep. But then obviously, like you said, in some cases you can't avoid it. You have to go through an LP process.
Yeah. And the other thing too is like the LP, the limited partnership structure was kind of designed to be relatively light in terms of the cost and cumbersome aspects of the structure. Yeah, that creates. There's a little bit of thinking that has to go into it, but the whole point is that you're not doing a initial public offering is like really where a lot of this came from. It was this idea that syndication of deals or what they call private placements. Those were basically to get around the cumbersome aspects of raising capital. And I think if you're buying 10 million, 5, could be even 3 million. If you're raising outside money, the limited partnership structure is really the one that you want to go with. And then the other piece is that the deal itself, if it's $5 million plus, the deal will the deal will be able to handle the larger expenses. Mm-hmm. So like when somebody's like, oh, your lawyer's expense to create the LP, the memorandums, the private placement, it's tens of thousands of dollars. It's like, yeah, well, the property's $5 million. So it's relative.
Right.
If you're buying a $800,000 property, then yeah, it's from a relative standpoint, it's way too much to spend on it. But yeah.
Makes sense. So let's maybe segue into the recent announcement about the foreign buyers ban. So how is that going to impact, you think, yourself and maybe just Ontario in general or Canada in general? Just your take on that.
Yeah, well, Trudeau, he just he's full of surprises, and this for those that don't know, I think it's been fully passed. It's basically a 2-year, as far as I understand, a 2-year moratorium on foreign buyers for Canadian real estate. But there's a few caveats. So, for instance, it's not going to affect us at all because if people look online, I believe it is 4 units or less. It could be 3 units or less. So it's really targeting residential single-family homes. For the people that are investing in Canada that are buying larger properties, it's not going to affect them. My view on it is it's always done in the name of affordable housing, and there's without getting political, there's a number of ways to attack affordable housing. I think the backwards way is to do it this way. The idea, to be the most charitable is the idea that you have foreigners driving up prices of our property values, and that this is going to somehow, if we elbow them out, there's going to be more affordable housing. I think that makes sense in a vacuum, but the idea of affordable housing being an issue is, from my point of view, and obviously I'll be the first to say I'm biased because I'm in the commercial real estate world and real estate world. My concern is more that we're not building enough affordable housing. Mm-hmm. And part of the reason we're not is because I think that the regulatory environment is extremely cumbersome. Like if you're in Brampton and you're renting out a basement apartment, the amount that you have to do to comply to be able to rent those units out is extraordinarily cumbersome. The regulations to even get a use change for properties is extraordinarily cumbersome. Those aspects, if people think that those don't affect pricing, they're out of their mind, because when we do build properties, the development charges, all the charges that go into building eventually go down to the customer, the renter. So I think the way that we need to address affordable housing ultimately is to be able to let that the product actually get built. I think it's a Band-Aid solution, sure. But we'll see how it rolls out.
Yeah, makes sense. I've touched on this recently on my other episodes, but so last year we bought 4 townhomes side by side, and our plan is to duplex them all. So just to kind of touch on that, what you're mentioning here, the process goes like this. There's tenants in there, so we had to file an N13 for renovations. Then from there, we have to apply for a minor variance because of the parking. So we currently have depending on which unit. Some have one parking, some have two, but they don't meet all the code and whatever. So we need to now wait a couple months to get a hearing for the minor variance. If that gets passed, from there, we need to do the drawings, file for building permit, which takes another couple months. So this whole process is going to take like 2 years or longer from start to finish to get done. So just to your point, like it is a long process to add units to make more affordable housing.
Yeah, absolutely. And like I had, for those interested, shameless self-promotion, but Working Capital, my podcast, I had Richard A. Epstein on the show a few days ago. He's a returning guest. You Wikipedia him, he's a legal scholar in kind of law and economics. And we had him on an episode, kind of the history of rent control and rent stabilization. And, basically, his view was that if you want to solve or address affordable housing, the way to do it, his honorable way, is the way he said it, was that you basically allocate money in the treasury, the public purse, to be able to go towards these, and you basically say, whatever the affordable housing price is, that the government will subsidize the development of these. So when you have a builder building, you can make a requirement of a certain amount of affordable housing, but you actually are able to either credit the individual with a credit that goes towards housing, or you credit the developer. He said that one of the issues with a lot of the laws is he's in the States, so I'm not sure exactly if it's the same in Canada, but if you're under a certain income threshold, then you are not eligible for it. So he's like, what happens? Somebody that drops below or goes above that income, they'll start trying to game the system so that if they are earning money above that, they'll do it off the books. And like there's, people start trying to get around it, where in his example, if you do earn more than the threshold, then you have to chip in more for, that bracket of affordable housing. So I think, the bottom line is I think there's a bunch of different ways to actually address the problem. I think the way that we do it, especially in Canada, where it's almost impossible to get somebody out of the property, even notwithstanding the fact that their lease is done. But it's kind of like having a tenured professor get fired. It's near impossible to get a tenant out of a property if they don't want to leave the property. Yeah.
It's been a big challenge, but it's something we've talked about. But I did take an apartment investment course recently, and the person that was running this course did mention that he thinks Ontario is still one of the best places to invest. Like these challenges that we face are what's really driving up our rent prices. Ironically, they're trying to maintain rent, but because of rent control and the difficulty of getting tenants out, it's actually driving up the prices. And it's still a great place to invest, and I believe that as well. Yep. But I know you touched on before we started recording that you are exploring Orlando as an option. So maybe you just want to briefly tell us why you're looking at that market.
Yeah. Well, one thing I'll just say, just to tie off the valuations in Ontario, I think we still have what's called rent decontrol, which just means, most people will know this, when a tenant leaves, you reset the market rents. And that's one reason I think for those that are interested in getting into investing, student residence or student properties, there's a bunch of reasons, people say to not invest, but at the end of the day, pretty much every 2 years, every 3 years, you reset to market rents, right? Because by definition, the students don't stay there for 5, 10, 15 years. The piece with Orlando, I wanted to enter the U.S. market. In an ideal world, it would be to purchase a larger apartment building down there. But I thought as a kind of a first step there was to buy a smaller property. So purchased the townhouse down in Orlando. And it was a relatively smooth process. Interest rates were a pain because over the last year where we kind of purchased it, they just kept inching up, and it was pre-construction. And one thing I'll say, it's kind of like from a Canadian point of view, for an agent to be like, yeah, it's going to be built then. I'm like, yeah, okay, it's going to be built then. And we get it closer. Jess, you got to get the mortgage. I'm like, yeah. Okay, the date. And I think like what I'm getting at is in Canada, if somebody says it's going to be built in 2020, if you're lucky to get it in 2023.
Right.
And I was just amazed. Like people are like, well, it's the weather. It's like, well, the weather is one thing, but just in Florida, it just seemed like the regulatory environment, whatever the situation is with the trades down there, it just seemed to be more efficient and actually go up a lot quicker. The same townhouse complex, if it was in Toronto, probably would have taken 2 more years. So I'm sure there's smarter people than I that know the reasons and kind of the intricacies as to why. But one thing with this property is it's a 3-bedroom townhouse, and I just rented it to a younger professional, and I think we're just shy of 4,000 USD a month.
Wow.
And it's not an expensive, like I purchased it for 530,000 USD. So if you extrapolate that Canadian, so say it's 700 and change Canadian, 4,000, whatever that is, put 30% above that, you can't find that in Toronto.
Right.
It's impossible.
Right.
So, I think one of the big aspects is I tell everybody that is looking to invest in an area, say you're looking to invest in, London, Ontario, or pick your area. I always say, talk to the property managers in the area, because they're usually really dialed in. And that's what's nice about buying this property now, because now I've started to make connections with accountants in Orlando, with property managers in Orlando, and that will hopefully lead to kind of larger investments in the area.
Sure. Yeah. So it sounds like you're looking to get into the Orlando market because of prices, rent, and then the ease of building and permits and all that stuff, right?
Yeah. And the other thing, I can't remember offhand, but there is a hospital that's about 20 minutes, 15 minutes from my place that has one of the best trauma units in the States. And that was a really big selling point, because a lot of the working professionals that work for this hospital were basically rent out in kind of the 5-kilometer radius of where they work.
Cool. So that's great. Good luck with your Orlando projects. Hopefully you'll continue to build there, and good luck with your Toronto building and everything else. To end things, do you want to just share like how people can get in touch with you and the services you're able to provide?
Yeah, sure. You can go on to Jesse Fragale, Fragale, put out content on YouTube, or you can check me out on Instagram. And for those interested in the podcast, on Spotify or iTunes, Working Capital, the real estate podcast.
Cool. All right. Well, thank you so much for coming by. It's great meeting you, and looking forward to staying in touch.
Thanks, George. Pleasure.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.